I'm broadcasting to you from my solar shed here. We're way up in the mountains of Virginia. And I've learned to to bring this up on any call that I do because I know my background might look a little quirky, with the exposed beams and everything. This is a building we put up on the property it's running fully off solar power. So it might not look the prettiest, but it is totally off grid. It's become clear to me that we're on the precipice of a generational shift. I've long believed that the conventional approach to financial planning was outdated and inadequate. And I think what's happening on the macroeconomic level right now really solidifies that. So I want to make sure that everybody leaves here with an understanding of how what I consider to be a unique investment approach works. I was fortunate because that gave me a front row seat for the mortgage crisis of 2008. So in hindsight, the fact that they put those offices out where nobody would see them was pretty telling. That should have been a sign. Well, I started to realize the bank was not forgiving those fees. Not at all. Those fees were going right back into the modified loan balance. So I started to see that we were adding thousands and in some cases, tens of thousands of dollars to the mortgage balance. I'll never forget my boss just kind of scowled at me and he very sternly was like in the middle of the meeting in front of everybody, just keep your head down, do your job. It became clear that this was just a partnership between the banks and the government to make the immediate problem go away. There was no long-term thinking involved whatsoever, as far as I could tell. So that opened my eyes and it forced me to question a lot of what I thought I knew about how the financial system works. The problem is that there's a massive industry in place that does not want us to have good information when it comes to personal finance and investing. They don't want us constructing a robust investment strategy. And that's because they want to just herd us into the financial products that they create, so that we pay them fees month after month and year after year. And only then did I realize that it was possible to protect against inflation and economic disruptions, but at the same time, create extra streams of income for yourself without exposing yourself to excessive risks. We just had 4 American banks collapse in 2023 without any kind of crisis whatsoever. They just went bust almost out of the blue. But the real magic is in how these companies manage the money that they make. So what really sets the insurance business apart is that the good insurance companies, they always think long term. So it gets to the point, if you look into some of these companies, it gets to the point where they're making millions of dollars in extra income just from their investments. So there's two sides to it. And here's the thing. We can follow this exact same model to create our own self-reinforcing system. We can become financially bulletproof in just the same way. The key to success is just to mimic the insurance company by setting aside just what we need to cover our expenses. Then we should move the rest of our money into investment buckets that will protect and grow it and then start producing more income for us. For those who are more advanced in their career or even retired, you don't have to worry as much about building as you do stewarding what you have, the money you've saved, and then using it to create robust sources of income. And the end result is that you can make your money bulletproof and create extra income for yourself. So individually, each asset class is going to have its own strengths and its trade-offs. But there's magic that happens when multiple assets are strategically assembled under the same roof. And so we can use these investments to create thousands of dollars a month in passive income as we build up our portfolio. And the key there, once we've reached the point where the income that we're getting from our cash flow investments, when that exceeds our expenses, that's financial independence. And then alternative investments, they can provide us with resiliency in the face of any major crisis. So they can serve as something of a hedge to ensure that we can weather any financial storm comfortably for an extended period of time. Gold is the world's one true monetary metal. It's been used as a store of value for millennia. I firmly believe we're going to see gold remonetized within the global financial system in the years ahead as well. We also know that there will only ever be 21 million Bitcoins ever created. And we know that the very last Bitcoin will be mined in the year 2140. We don't buy gold and Bitcoin hoping to sell them for more dollars later. No, we buy gold and Bitcoin because we want to own reserve assets for generational wealth preservation. You just acquire the best assets that you can, then never sell them. The world's old money families have been playing this game for generations now. But somehow they've convinced us that we're supposed to, buy low and sell high. Like we want to make more dollars. So we can do the same thing as the world's old generation, old money families. So I look at this and I project it out. I'm like, we could put an end to the rat race once and for all. So when it comes to stocks, we want to focus on boring businesses that do nothing but crank out free cash flow for investors, quarter after quarter, year after year. But if you buy capital efficient stocks, they're going to pay you dividends. And if you reinvest those dividends, your investment will compound even if the stock never goes up. The name of the game is just to stack these assets. If we gradually stack these assets on top of each other, really, I think we'll be amazed at how quickly we can create thousands of dollars a month in extra income. We're going to approach this as a specific investment plan to create $3,960 a month in passive income in just 3 years' time. Okay. So this property will produce $515 a month in extra income. And we're talking totally passive income here. After all expenses, our cash flow would be $515 a month. And that's going to hit our bank account with absolutely no restrictions or strings attached. We can do whatever we want with that money. If we keep making similar investments each year for 6 years, you can see we'll have $6,720 a month in extra income coming at us at the end of year 6. Okay, that's money hitting our bank account every single month. If we do the math there, that's over $80,000 a year, which I think that's pretty good for passive income. And guess what? That money is ours to use for whatever we want. It's not tied up in a retirement account that we can't touch until a certain age. No, it's going to hit our bank account every single month. And we're going to use some great strategies to minimize taxes on it too. If we focus our investments on assets that produce cash flow, we can create a self-reinforcing system that's going to grow both our assets and our monthly income over time. So I see this as a much more resilient approach compared to the conventional financial planning. That's what I love about this. You don't need to hit it big on the next hot investment trend. You don't have to uncover some hidden deal that nobody else knows about. You don't have to check account balances all the time to see where you are. So we work hard and we save up all this money. Then we draw it down, we sell it, or we sell the assets. And by doing so, we reduce our assets and the future income available to us. Mike there told me he used our membership to build up more passive income than he ever thought possible. And I'm trying to remember, I think he told me he worked up to over $3,000 a month in extra income just in the first 3 years, or maybe two and a half years, something like that. So he paid $20,000 for this thing. And the program ends by telling him to send letters or call people he doesn't know to see if they want to make him a deal on investment properties. And I'm like, who wants to do that? My goal is for the Phoenician League to pay for itself within the first 12 months, meaning the investments you make will grow to the point where they surpass the membership cost. When you start to implement some of these tax strategies, the advanced tax strategies that the old money people have used for years, I kind of find it fun. I do not like the U.S. tax code. I don't like taxes. I'm not an advocate for it because it limits our ability to be a good steward of what we work so hard to earn. But if you have other subscriptions that you pay for, whether it's finance or investing or really anything, helps you grow, helps you learn, you can move those to a business expense and deduct them. The tax code, something like 90% of it's about how to not pay the taxes that the rest of the code says you owe. My approach and my suggestion, and of course I'm not a licensed financial advisor, so nothing I say should be, please don't take this as literal, go do this right now. I can just give you my opinion and my thoughts and share with you what's worked for me. I didn't have much money. I wasn't making that much money. I just took a little bit of it and started buying these assets. When I wised up, at first I bought stupid stuff, but don't buy stupid stuff. Gold, Bitcoin, best stocks. Just a little bit of it at a time and it'll add up. Mortgage notes produce considerably more cash flow, especially in the current climate. But there's a trade-off. The trade-off with real estate, you own a hard asset. And if you take a mortgage, that's something of an inflation hedge as well. Yeah, if you have pre-existing medical conditions, you're not going to be able to get a policy on yourself. But what you can get is if you have children or grandchildren or a business partner, you can get a policy on somebody else. I've got life insurance on my kids, not because I want the life insurance, not because I want to get paid if something happens to them. I would be absolutely devastated if something happened to them. for as long as we have property rights, we're going to have functioning real estate markets, financial markets, all those things.